Hello and welcome to another update video about HBAR. So let's talk about the HBAR chart and structure. Let's maybe start on the daily time frame. I'm tracking two bullish scenarios here on this chart. Want to go to the daily. Tracking two bullish scenarios on the chart. The first one is a large ABC structure as highlighted in white, in which obviously after the June low, a 5-wave pattern to the upside materialized. And then this could be the A wave of that ABC structure. Then this move to the downside could now be an ABC structure in a B wave pullback, in which the support region is relevant between 5.2 cents and 8.6, even though the way it's looking, we might, if the B wave is indeed unfolding in white, then it likely will not dip very deep into the support region. So we might only see the area tested between 7.5 and 8.7 cents. And then we could see a C wave rally from there as an ABC structure, yeah? So we're going to discuss this structure on the smaller time frames in a minute. In the yellow count, it's a slightly different structure, but the price seems to be respecting a little bit more at the moment the white count. In yellow, we have a different structure, and it would be a larger diagonal pattern in which we had a wave 1, a wave 2. The wave 3, however, isn't finished yet. It should reach minimally 14.5 cents. I mean, you could say it reached 14 cents, but it should reach 14.4, but it reached 14 only, and 14.4 is only really the bare minimum. So because that's the minimum, that's already below my minimum. So I don't trust that this is already a completed third wave. If we see extensions from here to 16.8 cents, which is the first ideal level for a third wave, in this case in the yellow count, yeah, then I can consider the yellow count more. It's not unlikely that the yellow count is playing out, okay? In fact, we're talking about how we can distinguish these two counts on the smaller time frame. But as soon as the wave 3 is topped, then we can look at the wave 4 pullback and then a wave 5 to the upside. So looking at the shorter time frames then, if we say that the A wave topped in the white count, let's just go with that assumption for now. It is possible that the B wave started and the initial move down here into the March low on the 20th of March, where the price bottomed locally at around about 9.8 cents. That was the A wave. The move up could have been the B wave. It is technically complete. The price got rejected from the very important 78.6 Fibonacci retracement at 12.9 cents, and the C wave to the downside could unfold now. However, yes, we had a nice rejection, and on the smallest time frames, it looks a little bit bear flag like here, a little bit, yeah. I still would need to see a break below the X wave low, that's wave X in this B wave corrective rally, to basically have good confirmation that the pathway to the downside is continuing, so the C wave to the downside, yeah? So I want that level broken. Why is that so important from an analysis point of view to wait for confirmation? Because we know that 3-wave corrections always extend. Okay, not always, but very often these tend to extend. And for example, this B wave, which presumably topped here on the 26th of March, can easily morph into a larger B wave. How is that possible? Well, it could simply be that the initial 3-wave move up here was an A wave, the move down a B wave, and now we rally in a C wave. Well, that would be much less likely, not impossible though, but much less likely with a break below that 10.4 cent level. So at the moment, it seems to still, want to grind a little higher, but it could easily have topped. It could easily have topped. But for me, the preferred scenario at the moment is that this is just a B wave rally. Maybe it's finished, maybe it extends a bit further. But at the moment, my preference would be that the price dips into the yellow support region once more. And then looking, not once more because it was never there, but you know what I mean. With the structure that we have at the moment, if we say, okay, maybe the B wave topped, then target for the C wave to the downside is sort of the range between the 100% extension and the 161.8 extension. So here you can see 9.2 cents to 7.4 cents. That's an additional area of interest in addition to the main support region. So we might, as I said, we might never go very deep into this support area. So that's what I'm watching here at the moment as a potential. I mean, as soon as we have a sustained break above the March high, which is at 14 cents, yeah, I might have to assume that we are in the yellow count, okay? But it just started to look much more like the white count, especially with this strong decline, than a corrective looking rally. I mean, a 3-wave rally typically would indicate that, yeah, we are in this correction. That's pretty much in line with what I expect for Bitcoin as well. But also on the Bitcoin chart, another extension in the correction is possible, which is why we want to keep the door open for a higher B wave. You know, at least don't be surprised by it. That's my update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.